All right, we're going to talk a little bit about silver here. Okay, and I am Alan Palmer. We're your human technical analyst, non-robot. Okay, that was the first thing. Technology, big tech. The first thing they came for were the traders. Okay, big tech cannibalizes everything, or is very susceptible to either corruption or nefarious means. Okay, we'll get into that later here. So this was yesterday's range. We're looking at a daily chart. This is silver. Okay, so what do we got? 48.01 to 45.70. Whew, man, $2.30. Almost a 5% break. Okay, just from high to low. Okay, you do have an outside down day. Actually, we're going to call that a key reversal. Okay, let's just look at it right here. What's a key reversal? Key reversal, we make an all-time high. And we close below that whole range there, the previous day's range, okay? So at one time, we were more bullish than ever, okay? Well, silver traded up to $50 back in 1980, okay. And by the end of the day, we closed below the whole range, okay? So now let's look at it here a little bit on an intraday. Okay, this is the banker's hours here. Okay, so we just opened up here. I wouldn't touch this thing with your money. As a matter of fact, if you're looking to sell this with a new high stop, okay, let's just for shits and giggles here, let's put this up here. Okay, 47.74. Okay, what did we do? We just opened up at the 725 bar. Traded up to 47.83, okay? So $10. Okay, so on a one lot of a 5,000 ouncer, and these contracts keep getting bigger and bigger, you know, as we go through. Look at the S&P. You know, we used to be, we've gone up tenfold since the crash. So anyway, this would be, we're starting to get some trade here a little bit. We still have the buy. These are the diamonds here. As a matter of fact, let me pause that here because I don't see the sevens leading up to that, which means I am missing a condition, okay? These would be the things if, in fact, you wanted to learn. You say you use your own software. It doesn't matter. Interactive Brokers, even Bloomberg, you know. But if you use Bloomberg, get a hold of me. I could save you 10 grand. You don't need all the bells and whistles, okay? Okay, so I was missing a condition. That's a condition here, okay? So you can see the sevens on here. These are nice and large here. Sometimes on some of the older charts, the sevens are small. You have to modify them. Okay, so the seven, we start running the sevens like right here, okay? 7 is a completeness, actually, in the Bible. It is. But here we start running them. So we got what? 10, 11, 12, 13, okay? 7, 9, 11, and 13. So back to silver here. So we finally, you know, because this has been straight up here. Here we made 45 quarter to what is that? 44.65, about a 70-cent break. Follow another one, and what is that? About 44 half. Okay, so that was about a 3% break. Okay, and then now we're getting the larger breaks. Okay, it doesn't matter here. And going in with this trade deficit, okay, I can see some deflationary things on the horizon, okay? It doesn't mean silver's going to top, okay? But now at least we're starting to get some two-way action, okay? It was pretty much unbelievable here on the upside. Let's go back to a daily chart here. Actually, here, let's go to a longer term. Okay, so here we went from 38 on the 18th of August, okay, to 48. Man. So 5 grand a buck per one lot. Okay, figure it out. My God, 50 grand a one lot. So okay, so here on a longer term intraday, we got the same kind of pattern here, and you did have big volume. Okay, actually the biggest volume of the rally. Okay, so I'm guessing that it's going to be, say, a big money manager, okay, who has to look at the door when When the birds are chirping, you got to feed them. Okay, that was from that Federal Reserve guy, you know, in that one movie. And so we'll see how this plays out. But this could be a possible short bet. And okay, which means you sell it short, but you got to come out over 48.05. Okay, or even a little tighter, or 47.85. Okay, save the $1,000 on a one lot. I'm just saying here. So so that's silver, because if we have, so we're in default. Okay, default is a good place to be unless you're a swamp creature. Okay, because these jobs, these wasted, the swamp in Washington, these jobs can be cut. Okay, and the rule is, in default, you can't spend a dime over what you take in. Okay, so but currently going into this, we had a $2 trillion deficit. Okay, that means so say for example we take in 5.5 trillion and we're spending 7.7 trillion. Okay, so that $2 trillion is inflation. Okay, and that's why things are going, that's why it's very hard to get things going down here. Okay, so inflation has tamed from the reckless $6 to $7 trillion, what do they call it? Inflation Reduction Act. Okay, now just remember, the serpent speaks opposite. Okay, this is the times we're in. So inflation reduction really meant inflation. And the Federal Reserve just came out and said they can't lower rates because of inflation. Where were they a couple years ago when they passed the $7 trillion budget buster? Okay, so now we have $7 trillion more in debt. Okay, that was just one time. This is gold right here. Okay, gold. Do I have gold in percent terms? No, I don't. We could do that here. Here's a plain Jane picture in gold, 3350 to 3900. Okay. Listen, you know what? The enemy is within. Okay, the Federal Reserve has Chinese spies in there. Okay, well, that's a conspiracy theorist. Conspiracy theory, a derogatory term for a critical thinker by one that's never had an original thought in their life. All right, so here, and this would be if you want to get if you're going to trade yourself, this is CQG. Okay, and as a matter of fact, I think this is okay. I think I have it defaulted. Okay, date 12/31/24. Okay, so we are up 40% right now. Okay, this is what we are. And did we stutter step at 32%? You know, okay, and then all of a sudden we launch. Okay, this is really, actually, as a matter of fact, this is since let's see here, since 1979, the biggest annual gain here. And you know what? Here, hang on a second here. Let's go to, okay, here we go. Hey, holy cow, what is that? Yeah, that is the history of gold. Well, look at that. Okay, look at this. We're plus 40% in gold right here. 39.02, almost 40%. This is interesting here. I'm selling CQG now here. Look at this. A 2-bar overlap. Okay, we're looking over here for colors. Okay, okay. And then this is a 3-bar overlap. Okay, okay. Here we go. So if you had a 3-bar overlap, okay, so you see them right here. Okay, whatever that might mean. Okay, I'm just showing you that CQG is pretty slick. Okay, if in fact, you know. And as a matter of fact, if you wanted to get some of my indicators and you have CQG, I can drop this. I can drop these things right to you. You don't have to dick around and try to figure out what they are. You know, which could take you 10 years. Could take you 10 years. Absolutely. Here's a little glance here. As a matter of fact, this is really kind of interesting. Back in the 70s. Okay. You want to know more about any of this, or you want to do a consultation? Okay. It's futures. It's big boys game. You know, everybody's responsible for themselves. Must have discipline. Holy snikes. Holy snikes. Wow. Okay. Up 262%. Wow, man. So do we have more to run here? Wow, look at this chart. Silver. Okay. Here's another possible look here. Targets. Woo! We going up there? Or are we going right up here? You can email me, ARP@NASDAQ. You want to talk some markets? You know? Listen, if you're that player, I think you do. Have a nice day. Give me a thumbs up or something on some of these social medias I play.